What is up, you guys? Today we're going to be going over NIO. Deliveries just recently came out. Looking at how the stock is trading currently, we are still within this descending wedge. We're going to go over if I think we're still going to see the breakout, what are some levels that we need to be watching, and ultimately where does this potential breakout line up, because it actually coincidentally lines up pretty damn perfectly with earnings. So hit the like button, subscribe, hit the notification bell, because all these videos are time sensitive. Check out our Discord community down below. It's completely free. The link is in the description. You guys get access to free courses, free live streams, seminars, webinars, as well as a ton of other free content. It is all in the description. We are the biggest and the best free trading community out there. All right, now let's take a look at NIO. Basically, for the past year and a half, NIO has just been doing nothing but going down. We did have this consolidation time basically from the 21st of March all the way out till January 11th of 2022, where we just traded between 45 and supports of 33.48. And really, we just traded between those ranges, which have been very, very good swings if you're able to time the bottoms and the tops. But since snapping major support on December 7th of 2021, we've really seen a continued drop basically from that $32 level all the way down to lows of $16, or actually lower lows of $12.87. So looking at where we are right now, let me go ahead and zoom this in for you guys. It'll be a little easier to see. We have this descending wedge. Now, one thing I want you to note is we did have a false breakdown back here on March 15th where we had this big fade that was quickly bought back up. But the one thing that I want you to note is the good divergence that is forming here. Now, a divergence occurs where we make a lower low here on the overall trading on the overall stock, but the RSI actually makes a higher low. So we had this initial divergence that was formed right here, and you can see that back on January 28th of 2022, hit a low, RSI tapped 27.22, followed by a lower low on March 14th where the RSI only hit 29.23. So we had that higher low. Now we have not made a lower low. We actually started to push back up, and we are still within this inverse head and shoulders pattern that we've been talking about for a bit. And at this moment, RSI is pointing up, which is a good sign. Volume is holding, and we're still trending within this descending wedge. Now, two things that are going to act as major resistance. The first one is going to be this 22-day EMA, which if I remove this, you're going to see the 22-day EMA is going to act as resistance, followed by the 50-day SMA, which is going to act as resistance as well. But here's the catch, is that even though it's going to act as a resistance, if we can actually break through up to about $20, it's going to be a pretty damn easy move from $20 all the way up to $30, which is an insane 54% return. But getting through this resistance is going to be very, very important, and it is not going to be easy. If we zoom out here a bit and we take a look, you can see that we do have a decent support all the way back from this old resistance on July 8th of 2020. Now, there is something I want you to understand with longer term support and resistances with, something like we're looking at now. Usually on a bigger time frame, we tend to see major support and resistances work very, very well. But something else I want you to understand is that as time goes by and more retail traders get knocked out of the market, the less new blood understands and knows about those. 'Cause that's all these supports and resistances are. It's just basically human psychology saying this is a good time to buy, good time to sell. So we do still have a gap that could fill down to $10, and then another gap that could fill to $8. But I think ultimately right now it's a pretty damn good time to be buying into NIO. And for me, the one thing I would be doing, like I always say, is selling cash secured puts or put credit spreads. Really, cash secured puts would be the best move because I think with that, you're going to get a pretty damn high premium, and the worst case scenario is going to buy the shares. But look at where the apex of this breakout is actually going to end up being. It's going to be right here on earnings, the 13th of May, and it looks like this is where the apex will be. I don't expect any major movements, to be quite honest, until we have earnings, because we're not going to normally see any reason for a major breakout until earnings happens, especially if deliveries didn't do it. All right, guys, thanks for all the support. Hit the like button, subscribe, check out our Discord down below. Comment below any tickers you guys want me to go over. I will go and add them to the schedule for shooting. And as always, guys, thank you for all your support. Peace.